Okay, my friends, welcome back to Build a Profile. And we are now into Module 5, which is how to use profiling to find probable prices. Now we're going to continue what we were talking about in Module 4 about how profiling markets can help you see what others can't. This is just another rev on that to give us additional insight into how we can use profiling irrespective of the product that we're trading, whether we're trading Forex or stocks or futures, some type of continuous auction price. We can use the profiling to find probable prices. And we're going to define more what we mean by that. Again, always reminded that trading involves risk, and you should be aware of the risks or face the consequences of that. The whole idea behind this course is to give you greater skill so that it reduces your risk and give you better opportunities for success. The module objective is that profiling markets removes randomness from markets and gives a participant an expectation of activity in a way to objectively define risk. What do I mean by removes randomness from the markets? You may hear someone say, hey, the market's going to go do this and it's going to do that. And you should be skeptical of that. The number of people that I see on Bloomberg and CNBC and all manner of different financial media outlets who say, price is going to go here. They really have no idea. Price is going to go where price is going to go, given the fact that we have all of these different participants. And that's the randomness of the market. In each given day, you don't know, and no one knows, is it going to go higher or go lower? You don't know that. However, you can infer a likelihood of direction given an observance of structure. And so by observing that and recognizing it's a random market, but when you see the behaviors that we talked about come into play, the structures that we're going to talk about come into play in this module, we're going to remove some of that randomness. And you're going to find what I found when I initially started to trade around auction theory traders, those that use profiling tools. I found that they would say, hey, I think there's a good chance, the likelihood we're going to get here, or I'm going to be ready to be active when we get to this price. And I go, where did you get that level? Where did that come from? Why were you expecting that today? It seems like it's forever away. And it's because they knew the behaviors. They knew the behaviors. They knew what it was telling them as the auction was taking place, and they knew what to expect on that day. Really, really helpful. Imagine if you can come into a day and as you see the price auctioning, or even in a week or month, whatever, you can see the price auctioning and know, hey, here's the likelihood that we're going to go to X price or not. You will be ahead of everybody. The concept that really boils around the idea that markets display consistently observable structures and behaviors consistent with auctions. So think about an auction, especially a two-way continuous auction like a housing market. A housing market prices go up until what? There's nobody left to participate, and then they go the other way. Or they go up, they'll pause, they'll kind of cool off for a little bit until the perception of value shifts, and then they'll continue in that direction some more, cool off. It's the four behaviors that we talked about. It keeps going up, and then eventually it'll turn. We know this, which leads us to probabilities. Specifically, we define these, we talked a little bit about the anatomy of the profile in the last module. In this one, we actually categorize some of this anatomy into something we call open types and day types. And we talked about that there are two types of profiles. There are market profile and there's volume profile. This is primarily seen in market profile tools, and we're going to look at some examples around that. But we have what we call open types and day types, and where this nomenclature comes from, it comes from the research of a man named Peter Stottlemyre. In the 80s, was working the Chicago Board of Trade and was able to coalesce what he was seeing in behavior among professional traders through these open types and day types. So I just want to kind of walk through the open types and day types that we look at. Again, these are applicable to any product that you want to trade. And in future modules, we're going to actually look at those in the specific markets. But open types, and these occur in directionally convicted order. So for example, we have something called open drive open type. This is where the market just opens and drives in a direction, like does not does not stop, you know, at does not press go, does not stop, collect $200. It just takes off. Okay, that's the strongest open type that you can exhibit. There's something called an open test drive. So this is where the market will open. It'll move and, you know, test some prior reference again to our, you know, 4 behaviors, and then it'll come back through the open and drive away from the direction that's tested. Open auction outside of range. So this is where we gap away from the prior day, and we're open in the first hour. We're auctioning back and forth, but outside of the prior day's range. Then there's the open auction inside range open type, which is the most prevalent type. About 70% of all opens are open auction in range. And then somewhat rare to be seen, although we have one today, but an open rejection reverse open type. So it's a little bit like the open test drive. It's just not as violent, but still ends in the same type of behavior. So these are the open types that we observe, from the strongest as an open drive down to the least convicted and rare, the open rejection reverse. Just to give a little bit of an example of these, so pop into the platform here real quick, and we will take a look at those that observed today. Now we're going to look at some examples as shown in the futures market, because I am primarily a futures trader, although I trade stocks and Forex as well, but primarily an open futures trader, which we will talk about why primarily when we get to that module, which is coming down the road. But here are 4 products that I actually trade just about every day. One of these is crude oil. Okay, so let's look at this relative to, so here's these, and again, this is a market profile graphic, this arrangement of letters. It's really just arranging 30-minute price data by letter or session or period, depending on the nomenclature. The order of the letters doesn't really matter. So, you know, some start with, you know, some use numbers, but really what we're trying to see is that as this thing collapsed down on itself, it gives us a shape that we can look at. It looks at the bell curve that we talked about in module 4. All right, but this one is actually broken out because futures trade 24/6. So we have an overnight session that's prolonged as opposed to what we see in stock markets or equity markets, which is totally fine. But let me cancel this real quick. But I want to identify. So this was Friday's range. Okay, here's the high and low of the range. All right, and then if I look over here, this is today's profile. This is actually looking even further inside of that, so we won't go into all of that. But if I look at Friday's range, and I look at the A period and the B period of this, see how they overlap each other, and they are inside the prior day's range. This is an open auction inside range, open type. Okay, let's look at 30-year Treasury bonds. Right, so here is Friday's range. Here we have A period and B period. Appears to be an open auction in range, and actually this could be an open auction in range or an open rejection reverse, meaning that the auction attempted to go higher up into some resistance and then rotated out. So it came up, and, you know, given the fact that we opened down here, moved higher and then rotated out. Again, this is not as violent as an open test drive, as those occur typically within the first 5 minutes, inside the first 30 minutes at least. This is more prolonged, but here you have an open auction in range or open rejection reverse that then leads lower outside of Friday's range. Okay, let's look at soybeans. These are soybean futures. Okay, here was Friday's range. Here are the first 2 30-minute overlap outside. So this is an open auction outside range higher, open type. Let's look at the NASDAQ. These are NASDAQ futures. So this is a way that you can actually express an opinion on the entire NASDAQ. This was, so you can see the open is right here. We moved lower early and then came back. This is an open test drive open type. So this, this is what I'm talking about, the speed of which in the first 30 minutes we came down, we actually tested a prior level on a profile, came back out, and then violently moved higher, which is in keeping with the fact that the open test drive is a directionally convicted open type. Okay, so every day I look at what open type am I dealing with, because that gives me great insight into what I'm looking for in that session. Okay, now corresponding to open types, there are day types. So once the open is developed, then we have these days that develop, and same as with the opens where we have ranking in terms of directional conviction, but we have a trend day. Okay, so a trend day, and I'd also note that they are not textbook cases of any of these. They're more structural similarities, which is why it takes some time to learn how to identify them. However, once you can see them, you can't unsee them. So it just takes time looking for the characteristics of the structure and knowing that. Trend day is when price moves higher or lower in each subsequent 30-minute period, and that the low or the one extreme of the day occurs in the first hour, and the second extreme of the day occurs at the end of the session or the last hour. Okay, we had a trend day today in the NASDAQ. You can see the low was put in here in the first 30 minutes, and the high was put in the last hour. Okay, that's a trend. That's a classic trend day. Higher lows, 30-minute periods the whole day, and you get a very so this is the compressed profile. You get a very elongated profile that results. A neutral extreme day. So this is a day where we auction on both sides of the initial balance. We didn't have any neutral days today in any markets, but as we talked about in the, probably the closest we had would have been crude oil, but we talked about the initial balance here last module as one of the anatomy structures of the profile. And a neutral day is when you exceeded in both directions beyond the initial balance. That's a neutral day. A neutral extreme day is when you close at one of the extremes. So if we, for example, if we had come down, taken out the initial balance low, came back and traded through the high, and then closed up here, that'd actually be a very strongly directionally convicted day. We'd expect some follow through the next day. So that's a neutral extreme day type. A normal day, now this is the most prevalent day type that you can see. We actually just saw one here in crude oil, and that is when you have an initial balance and you have a bit of extension past that first hour's range. It's a normal day. Some will say that a normal day is where you don't exceed that first hour's range at all. I don't use that nomenclature because they don't hardly ever show up. 95% of sessions, whether it's a stock or a future, you will exceed the initial balance. So I don't even look, I call a day where we don't exceed in any direction a non-trend day. That's where we would stay entirely inside of the initial balance. They're very rare, very rare. Typically precede some type of either earnings report or economic data, and the market is just resting before that information is released. Okay, but once you can identify, open type, that can start to lead you to ideas of what the day types can be, and then because there are correlations between those, and it gives you all kinds of ideas of how the day is going to progress and what to wait for and what not to wait for. Today, I took a late day trade in the NASDAQ because it was I could identify it as a trend day, and there are certain things that trend days do at the end of the day that allows you the opportunity to have a high probability setup. This whole thing is around probabilities, and a probability is not the same thing as a certainty. Probability is a probability. It's a better than 50-50 chance. You have an edge is what we're going for, and having an edge in trading or in any business is what is very attractive. Okay, nodes. We mentioned this in the last module, but we're going to do a little bit more to talk about this in this module. So there are high volume nodes and there are low volume nodes. And this is specific to volume profile as opposed to market profile or time-based profile. So the high volume node is what we call an accumulation of volume at price, which signifies value acceptance. And when we move into those areas, we typically slow as we come into them. So just to give you an idea of how this plays out. Today we had a move here in the bonds, and we actually had a higher volume node right in here that came from a number of sessions, basically a day session and overnight session from a week or so back. And as the auction came into this area, we slow. Okay, so and the reason that we slow is because that is where people have accepted prices. In the past, we actually came up early when tried to go higher and rejected. Why? Because there was a big high volume node up here there were so many participants who agreed on the value of this price, we just couldn't get through it. But we lumbered around this before we could move lower. Whenever we come into these nodes, price often slows because price has been accepted there before. Now we can have these on multiple time frames that these occur. Contrary to that, we also have low volume nodes. So some of this was actually built today. You can actually see on this chart, the color represents the age of where the volume occurred. So the green is actually old volume. The purple is actually new volume. So you can actually see we're coming back and laying prices on stuff we've been through before. I'm sorry, other way around. The purple is old, the green is new that we're laying on top of that. So you can see that we actually added to prices that were there before. You will often see that where we will go back over prices that we've been at before because participants accepted that. And here's the rationale and psychology about how that makes sense. Okay, one of the classic questions that is asked of politicians is, what is the average price of milk? They typically ask that as a question to gauge whether they are in touch with reality in the average person. But for example, in 2016, 1 gallon of milk was around $3.29 US. Okay, it actually moved quite a bit. Actually, in 2006, it went up to $3.87 before coming down to $3.29. But the average price for about 20 years is around $3 a gallon. Okay, so if you see price at $4 a gallon or $5 a gallon, and nobody's, people stop buying it because the price is too high, where's it going to go back? Is it going to go to $1.50? Probably not. It's going to go back to a prior price. If you see a housing market that moves higher and runs out of participants at those higher levels, the bottom doesn't just fall out. It goes back to a price that has found acceptance before, where people were willing to do transactions. That's what these nodes represent. That's a high volume node. Now, we also talk about low volume nodes, which is an absence of volume. So these are places where price moves swiftly and there's not a lot of participants at those prices. And so when we come back into those, we see different types of behavior as well. Tomorrow, in the bonds, we actually will, you can see this is the volume profile for today. So this is the high volume node. You see we're right on it. We have low volume above. It's possible that we actually auction very swiftly across this tomorrow because this was an area that was rejected, or we can come up to it and reject out. This is the type of behavior that we see in low volume nodes, is that price moves swiftly. We saw a fairly swift move in bonds today, lower relative to what we had been doing. You can see that we've been just kind of going back and forth for several sessions. Then now this, in one session, we moved more than we had in like 5 sessions. And we were moving across a lower volume area. So high volume node, auction slows. Lower volume area, auction can move swiftly, or it can come into an area and reject out. I was actually looking for one today that never materialized in crude oil. You can see there's a low volume node in here. I was actually looking for the price to come in here and then reject out. We never got down to the target before we just stayed higher. But that's the expectation. Instead, we stayed in this higher volume area. Okay, so those are nodes. So let me give you some homework for this module. Pick a trading product, go back 2 weeks, and print out charts, specifically if you have access to time-based profiling charts, and mark them up based on open types and day types. You know, so in students that I work with, we often will go back and look at specific days and say, okay, what type of open was it? What type of day was it? So I could go, all right, so this one right here is an open auction outside of range into a trend day. This one, open auction in range, neutral day, neutral center day. This is an open auction in range, neutral extreme higher day. This one is a open auction outside range higher into a normal variation higher day. Just being able to go through and quickly identify those, because they give you an expectation of what to see in the next session or even within the current session. That's the homework. Now I know that that's a lot, and this is kind of the first place that I want to talk about the fact that know that build the profile is this is an initial course leading you towards further exploration into profile and something we call the profile trading development pathway. And this is a 16-week intensive where we actually look at these structures every day and make trading decisions based off of them. As part of that pathway, there are 3 objectives that we work on. One of those is diving in further around these 4 behaviors that we talked about in the prior module, and also the 4 questions and the 4 stages. So, you know, this is stuff that you know, having seen it in the prior modules of this course, and we get even much clearer on that, so you have full grasp from a stage 3, almost stage 4 competency. And we express that in 2 ways. We look at day trades, which we call day trade plan, and we do use futures as the example because those are the markets that we trade. But you know, once you know how to see it in those products, you can see it in any other product. Or we do a swing trade plan where we look at the profile development pathway across a number of futures products and a multi-day type framework. If all of this seems a bit overwhelming, know that we're just trying to introduce you and let you decide where you want to further explore. And one of the places that we have to do that is with our profile development pathway. So if you have any questions, the day trade plan or the swing trade plan, start a conversation with us. We will not allow you to start until you've completed build the profile. We're using this as a primer for the other. Just because we've had feedback in the past that the profile development pathway is very comprehensive, and it's meant to give you a college level, professional level approach to markets. And I can't just dump somebody in that who's not traded before. They won't be ready for it. And so build a profile is to set that as a way to ramp you up and prepare you. If that fits you and what you're trying to accomplish in markets, that'll be great. That is Module 5, how to use profiling to find probable prices, and we'll be back for Module 6. Keep work up. Let us know if you're hitting snags, and go at your own pace. This is a lot of information, and I know that we release these once a day. I do not expect that you could do this work once a day. It may take you a couple weeks to get through that, and that's okay. Take the time you need to build the foundation to be successful.